A very warm welcome to a new episode of IDFC First Bank Presents Leaders of Tomorrow Season 13. I'm Ritwika Gupta, and tonight the spotlight is on PhonePe. As PhonePe gears up for its IPO, we take a closer look at the company's journey and the broader story of India's fintech evolution. On the show tonight, I sit down with Sameer Nigam, founder and CEO of PhonePe, who shares his vision for PhonePe and much more. Sameer, welcome to Leaders of Tomorrow. It's a pleasure to be chatting with you today.
Thank you so much for having me here.
So I want to begin this conversation by talking about India's fintech journey over the last 5 to 10 years. I think we have gone from disruption mode to deep integration. Tell me what, according to you, has been the single most defining structural shift in India's fintech ecosystem over the last 10 years or so?
Well, if you take a 10-year view, I think without exception, it's sort of digital payments reaching everybody in the country.
Right.
And I think there were two waves to it. There's obviously UPI in the first 4 or 5 years was all about money transfers and just payments made easy. Post-COVID, I think every little nook and corner is accepting payments. Every shop is accepting payments digitally. That's almost at like China levels. China is now only a little bit ahead of us in terms of digital payments. That was unthinkable 10 years ago.
Right.
I still remember logging into net banking and doing NEFT and RTGS transfers, and oh my God, we've come a long way.
Yeah.
But I think UPI has set the rails in place. Now you're seeing embedded credit. You're seeing credit on UPI, and the rupee moment starting to happen. And I think every financial sector is opening up.
Fantastic. You know, just picking up from what you said, India's digital public infrastructure, you know, whether it's the Aadhaar, UPI, ONDC, it's now being studied globally. Tell me, what makes this DPI model uniquely scalable?
I think projects like Aadhaar, the government's distribution muscle anywhere, the sovereign's distribution muscle and ability to convince people to participate in a collective exercise is unparalleled. As big and prolific as large companies or corporations in the US or in Europe or even in India could be, when the state decides to actually sort of invest behind things like UPI or Aadhaar or ONDC to a lesser extent, but even things like DigiLocker and DigiYatra, they're absolutely transformative because the word of mouth spreads so fast, and the inherent trust people can put in against these foundational models is also very high. Right. People trust that UPI will be well run and regulated because the RBI is standing behind it, NPCI is building it, the government's endorsing it. So that level of trust you can't get for free, that level of distribution muscle you can't get.
So tell me, with UPI, do you think it has made it easier, to build fintechs, or do you think it has made it difficult to make something truly differentiated?
In a way, it's both. There's over 100 UPI apps. I think that itself is testament to the fact that it's much easier to build payment apps today. And payment apps, in a sense, in India have become sort of the gateway into other financial sector apps. But you have to actually solve payments for payment's sake to make a dent in that market, right? If you see the market share of players, large players, has not really materially changed. It's been the sort of same 2 or 3 players that are about 90-95% of the market, and then there's a very long tail that's just constantly churning. Yeah. That's because most others are trying to use payments to do lending, wealth, insurance, food tech, ed tech. I saw a quick commerce company launch a UPI app last week. So that's like saying if I do UPI or payments well, I should launch a quick commerce store tomorrow. So I think everyone can enter, and that's the beauty of interoperable systems like UPI. Yeah. But you have to invest in payments for payment's sake, I think, to really gain any sort of serious momentum.
But tell me, what does the customer want? Are they truly loyal to payment apps and financial platforms, or are they just looking at incentives?
I think this is a bad myth we've created, and I think some of it, that responsibility is with the startup ecosystem and the media both, because I think it's just become common parlance to say that Indians only want cashback. And I'll give you examples. about 5 or 6 years ago, when the cashback wars were at their peak, not only did we go cold turkey and stop all our cashback, this is almost 6 years ago, we actually started charging customers a platform fees. This is not for using a credit card, not a convenience fee, it's an actual platform fees. We called it platform fees. It's as little as 1 rupee to begin with. And the amount of chatter was insane. But 5 years later, if you actually look, everybody from Myntra to Amazon to us to quick commerce, everybody is charging the customer a fees for availing of the benefit of doing things digitally. A book my show. 30 years ago, you'd go to a cinema theater, you'd send somebody there to book tickets. Today, if you're booking online and they're charging you 10, 20 rupees for the benefit of doing so, they're still saving you actually a few hundred rupees of just petrol costs, forget everything else. And customers pay. As for the loyalty part of it, we're now 10 years in. I can't remember when we did our last marketing campaign for UPI or for payments in general as a company, and our organic repeat rate is 99% plus month over month over month. So customers are loyal. I think ultimately payments in particular is very utilitarian. You almost never have a wow factor with electricity, gas, water, or payments. What you have is nightmare situations. So the best platforms are the ones that help you avoid nightmares. We don't expect our customers to say, I love using this app. I expect my customers to never say, this was a horrible experience.
Yeah, that's a very good way to look at it. So PhonePe is preparing for its IPO. Tell me, what does this listing represent for you as a company?
I think it's an important milestone. We're excited about it, but it's an important milestone for a company that's now about 10 years old. We like to believe we are very deeply penetrated in society. 4 years ago, we'd moved back from Singapore to India. We'd moved our domicile here, called it our Ghar Wapsi moment, and we're very proud of it. And today, we are very excited about the opportunity to actually list. One is for the public governance sort of stamp, because we want to hold ourselves to a very high bar of governance. We are a highly regulated business. It's not just payments. We are doing lending and insurance and stockbroking and advisory. So we are regulated across the board. And it's really important to actually have then a board governed, sort of publicly listed entity. Transparency is just higher. So that's one thing. I actually like being able to tell my story publicly. Second, I'm very excited about our customers becoming our retail shareholders tomorrow.
Right.
Because I think that's the asset test on whether you're able to actually create value in society. Is, are people who are using you every day able to also benefit from your growth? I think that marriage is very exciting.
So tell me, how does your risk appetite change once a company becomes public? Are you becoming more conservative, or does access to public capital, allow you to take bigger bets?
Definitely not more conservative. We're getting a ton of counsel, I can promise you that. Yeah. But I think by wiring, we're not conservative. I think we're thoughtful, and I think we will now need to be. And we're also very transparent as an org. Internally, for 10 years now, we've shared all our plans, all our projections with all employees at every town hall. Right. We'll have to change certain things. Sure. Right? So we're learning, for example, that there are things I can share with you only after I've shared publicly. That changes. Earlier, I would share certain announcements or facts with you. So we'll just have to rewire ourselves a little bit in terms of sequence. All the, I call that the technical aspects of being publicly listed. But I'm excited about telling our story through our numbers, through our plans publicly. I don't think we'll become more conservative. If anything, I actually think that we become bolder. Because I think by DNA, we've done the right things thus far. We're poised well to do well in the public markets as a company. Because again, governance is something that's very deeply integrated. It's not a challenge. It's not something we are sort of getting 40 lawyers to teach us how to actually run ourselves. We're so regulated. This is just par for the course.
Fantastic. Now, when you look at India's fintech space, we've got startups, we've got like big tech, global firms. Tell me, what will really define the true winners, in the next 5 to 10 years or so?
In the payment space, in the financial services space?
In the payment space.
You forgot the food tech guys, the e-commerce guys, the quick commerce guys, everybody else, right?
Yes, they're also there, absolutely.
Well, I think on both the consumer and merchant side, there is a pretty clear sort of breakout of Pareto that's come in. and it's been in place for the last 5 years plus. And there are certain reasons why it's there. It's easy to just say, there's network effect or stickiness, but that doesn't come for free either. I think the reason that on payments on the consumer side, we are still almost 50% of the value processed through the across both peer-to-peer and all merchant payments. On the merchant side as well, it's basically us and Paytm that define the Pareto. It's a very, very large market share. And I think that's because on the customer side, the snappiness, the predictability, and the resilience of payments wins. So the best tech shops will win. Ultimately, the company, and they're very good tech shops, including the big techs, who are playing in this space, but they're not putting their best engineers and their best product managers and designers on solving payments. Right. GPay does, they're with us right there. So the two of us are focused on it. Paytm does, they're number 3. Everybody else, payments is more of a feature for them, it's a gimmick to acquire. So unless someone serious comes in and does something seriously innovative, we don't know. On the merchant side, it's actually about putting people on the ground, which is with technology solutions combined. And few companies have the DNA to put 50,000 people on the ground while being a tech shop. So you don't see the big tech guys playing there. It's just not their DNA to put people in Chhattisgarh and Tawang and just across the country. So you need 2 different DNAs to operate online and offline.
It's time for a quick break here. We'll be back shortly. Stay tuned. Welcome back to IDFC First Bank presents Leaders of Tomorrow Season 13 in conversation with Sameer Nigam, founder and CEO of PhonePe, on the defining shifts in India's fintech journey and what lies ahead. Listen in. Do you think fintech platforms will soon start to resemble banks, and banks will perhaps evolve to become like, fintechs, or who wins in this convergence?
I think the lines will get increasingly blurry. But I think ultimately manufacturing financial products and distribution, those will actually pull further apart. So we see ourselves as distributing loans, distributing insurance, and the manufacturers are the ones underwriting. Now, what's becoming similar is banks are trying to distribute digitally more and more.
Yeah.
Fintechs are trying to become NBFCs or manufacturers. We've generally stayed away from that. But I actually think that there's a wild card in here, which is AI.
Yeah.
So if you ask me 5 years from now, I don't know if either of us looks like anything at all. We don't know what we look like. We'll get disrupted. They'll get disrupted. We'll disrupt ourselves consciously because we're a tech shop.
Yeah.
How they get disrupted, I don't know.
Right.
Yeah.
Sameer, tell me, where do you see the biggest untapped revenue opportunity in India's financial ecosystem today?
Oh, it's not even financial ecosystem. I think just for the formalization of the economy and the compounding, I think it's credit. Yeah. I mean, without exception. For a country of 1.4 billion people, I don't think we don't even have enough banks to cater to everybody's needs in terms of loans. Yeah. There is no developed market where getting formal credit is harder. Yeah. And therefore, not surprisingly, everybody wants to get into the sector. Yeah. I think India needs this digital banking moment desperately. I think India needs to have licenses on tap. I think India needs to have formal credit available in as many different types of products as you can imagine.
All right. And if you were to start PhonePe today in 2026, so what would you do differently?
If I was starting in 2026, knowing what I know, I'd probably start trying to build an agent and work inside out. Because I think AI is here to stay. If I started 10 years before I did, I would have started building on a website. But then the mobility phase hit. So with PhonePe, we never built a transactional website. We just knew the writing on the wall was already so stark. By 2016, if you were building a website, you were a Luddite. Today, if somebody's starting out, they don't need to disrupt or transform themselves. They should just be starting building on AI.
So Sameer, our show is watched by a lot of small, medium-sized business owners. Tell me, what has been the equation with MSMEs and PhonePe? How has MSMEs perhaps benefited from using PhonePe?
So we have a different suite of solutions for offline business, like shopkeepers, owners, for online businesses and D2C.
Right.
In fact, we had this ONDC-based shopping app called PinCode, which was actually trying to help digitize and bring all these businesses into the mainstream digitally. That entire team now is actually working on merchant VAS solutions. We wound down the B2C ambition. They are building toolkits for all these small businesses, ERP solutions, billing software. They're building CRM solutions so that you can market yourself on everything from WhatsApp to online. And we'll commercially release this in the short order, but these have all been tested out in the market, and I think we're seeing very, very good response. In the offline market in particular, we're also offering merchant loans for now about 2.5 years. Again, because of the data footprint and the fact that we can settle their loans every day and equalize daily installments, we can offer solutions others can't.
Right.
It just reduces the anxiety people have in terms of paying a lump sum at the end of the month if you just deduct 1/30th every day. Right, so that product is really sort of finding love in the markets. And it reduces the effective cost of lending.
Sure.
Informal lending for these segments is really, really hard to, formal lending is very hard to come by, and formal lending rates were just obscene.
Yeah.
So I think we are also able to play a role in helping convince our partners that you can reduce the rates further and further with each passing quarter, and I think that's a good thing. Yeah. The government also has this program called Udyam.
Yeah.
We talked about DPIs.
Yes.
So we actually worked with the Udyam team, the MSME ministry, and convinced them to give us APIs as a private player to integrate in the PhonePe business app. So we're helping also formalize that side. So now the government subsidies and other programs can also reach them directly. They now have a proof of business.
Fantastic.
So, yeah, lots of things.
All right. Tell me, for a young entrepreneur or for an entrepreneur watching this and they want to get into the fintech space, what are some of the challenges that they need to keep in mind, before entering this industry?
So I think there's a few. Specifically about payments.
Yeah.
I think because UPI is interoperable, I mentioned this before, people make the mistake of thinking because there's no barrier to entry or cost to entry, that you can acquire users on the cheap and then somehow some magic will happen. No, you have to create that magic. So you have to have a strategy for how you'll actually do something new or different in payments. If you think of the companies that are doing reasonably well on both sides of the network, they're people who are focused on payments. So one, you have to have clarity on why you're there. You can't flirt with payments and win share. So I think people don't necessarily get that enough. The second, obviously, is a regulated space. Now, people talk of regulation as sort of a bogeyman. It's not a bogeyman. You have to have intent to engage. There's two parts to it. There's compliance, there's policy.
Yeah.
A lot of tech entrepreneurs in particular, we've all gone to school or college and pretty sharp analytically. Compliance, there should be very little room for sort of failing, at least consistently, because it's pretty prescriptive.
Yeah.
You're told what to do. So if you don't do it, that's kind of on you. The challenge is that the policy, and not just in India, worldwide, regulatory policy is changing very fast, because if regulators try and hold you back until they understand, let's take AI as an example.
Yeah.
If they want to understand how AI will play out, none of us can start engaging with agentic models until the regulator understands, which means we've all missed the boat. And they're not doing that.
Right.
But if they wait, they'll say, everyone go crazy, but they wait until there's structural damage, then everyone will say they didn't do their job. So for the regulator as well, it's a double-edged sword. You have to try and move at breakneck speed and change the policies as you go. So as an entrepreneur, you better be prepared for the fact, I identified a really cool feature or a gray area, and you start really sort of driving fast, and you raise some capital, and now your investors say, you're the only one doing this. And the regulator comes along and says, you can't do this. You're like, oh my God, right? So that risk will always remain in regulated businesses. And it's happening east and west. Luckily, it's just across the board. So regulated businesses operate on a completely different paradigm.
Yeah. Sameer, our show is called Leaders of Tomorrow, and I always ask my guests, what does leadership mean to them? Tell me, what is your definition of leadership and has that evolved over the years?
It's evolved some. I was pretty fortunate. I grew up in a naval household, so grew up in a Fauji household. I think there's certain avatars. My archetype is, I think a leader should be fearless in leading from the front when the future is uncertain. The leader should be very comfortable sitting at the back and letting folks be in the limelight and drive the company and sort of mature when things are stable. So you have to front the pain and you have to take a step back, not the other way around.
And finally, Sameer, tell me, what is the strategic vision for PhonePe? Now that you will be, going for an IPO, what is the long-term vision? What can you tell us?
I think the vision was always the same. We want to use technology to better 1 billion lives. We pick payments because we believe it's the bedrock of distribution of financial services. Both the data that you generate for every individual or every business and what it can do for them to get formal credit or better insurance, etc., but also what it does for a tech company like us to better and in a more personalized manner upsell and cross-sell things.
Yeah.
You can do things with tech and increasingly with AI today that you could never imagine 10 years ago. So if you ask me for the next 10 to 20 years, we want to make sure that just like we've reached every household with payments, we reach them with a whole bunch of different products now.
Very, very interesting. Thank you so much, Sameer, for speaking to us today.
Thank you.
Thanks you so much. And with that, it's a wrap on this edition of IDFC First Bank Presents Leaders of Tomorrow Season 13. We hope you enjoyed the episode. Thank you for watching. Goodbye.